Hey, good morning, all. Monday morning, August 24th. Just a video update for you on the gold and silver markets and the miners. I know a lot of people are wondering if we're going to pull back further and what's going to happen here in the shorter term. I did a video about this on our public YouTube channel last weekend, sort of impromptu, and I was wondering if I should post it because I had gone through. I think I kind of rambled on a little bit about some things, and to my surprise, I'll pull it up here. You may want to check that out simply because we've had over 1,000 views in the week, which is pretty good for something that I didn't announce, and we've had 50 likes and 1 dislike. I wonder who that guy is. Anyway, that's a pretty good percentage. So I think, I just wanted to mention that if you want more information about the title of that is the short-term gold silver outlook, but I'm going to touch on that here and try to keep this to about 10 minutes. So those of you that, are rushed for time can listen to it and or watch. You don't need to watch me. I'm not going to be showing you any charts. I plan to do so more in the future on our YouTube channel, which I would ask if you like this content, please do. And if you want to be notified, like that one that went up last week, if you go on YouTube, you're going to see that there's a new video. If you subscribe to the Gold Investment Letter channel, which now is the Gold Investment Letter, it's not Erica Mashinsky and a mishmash. Some of the older stuff we still need to remove that are personal items, but this is getting cleared out because of some exciting partnerships we're working on the YouTube level. And so let's get down to it. So today I just made a couple of notes, and I'll make comments around that. But what I would love to let you guys know is that I try, and I do this a lot, probably more for premium and elite subscribers that we've already built a good relationship with. I'm here to try to save you time, right? And there's different ways to do this in terms of being a newsletter writer, research provider, commentator, whatever that is. But you have people that will do more of, for example, lots of data, lots of charts, put out a letter twice a week, put out a letter every month, and it's this full situation. And that's not what I do here. And so when things are crazy like they've been since May, where we have had basically a crazy market, and I've just been mad, it's harder for me to sit down and write and put out certain data. It's not that I don't want to put out sort of like proof, if you will, of where I'm getting my thoughts. And actually now, between Labor Day week, which is the next 2 weeks, I've committed to stop doing private placements and a lot of other things, because it's just been a whirlwind since May, and try to tone it down and focus more on my research and being able to write. The videos are a way for me to express these thoughts in a filtered manner, and I try to give you the meat of what I find, because just so you know, behind the scenes, if I'm not talking about it and I say my thought is this, this is what I think, it's not based on my whims or just me watching the market, although I'm probably one of the, I don't know. I mean, I hope some people still do this, even earlier investors, but I do watch the market by feel as a part of my, I can feel a market, I can watch a market and sense, going higher, going lower to a degree when I use it with these other tools. But I want to let you know that over the course of my career, but particularly in the last, 6 or 7 or 10 years, I have dialed down the number. I mean, I'm subscribed to a number of services. I get research from all over the place. A lot of it I do not read. Yes, I can get research from Goldman and from all the big houses, and I actually ignore most of it. If there's a specific area that I'm interested in, Goldman, I still think in the US they're the smartest shop on the street. But the thing is that we're focused a lot on the Canadian miners, and if there's a report that I can get, there's coverage from Canaccord or Haywood or whatever on a deal I'm interested in, yes, I'll look at what they have to say. But what I'm getting at is that I have narrowed down a handful of what I believe are like my trusted advisors as it pertains to a number of different things in the fundamental world. Um, this goes from macro, not even just straight gold and silver or anything, down to, gold and silver specific, but more, macro as well as people that are well versed. We look at everything. You have to look at everything, stocks, and especially there's one particular guy who I believe is just fantastic, who helps me a lot because his forte and what he looks at the most is the bond market. And I believe the bond market is the most important market. And that's the one that you really have to pay attention to for signals on where things are going. There's been another macro hedge fund legend recently who said that too. And I agree, but I'm not a bond guy. And so I rely on them for what they see because they've been watching the bond market, those two individuals combined, probably for 70 years. So I have my go-tos on that. And then I have my really small bench of technical analysts. And what I do with technical, so I have my own fundamental research that I do myself. I have my own format. It's not duplicatable, I don't think, because I just do my thing and I find what I need to find and I look for what I look for to sort things out. And then we'll go deeper if needed. But the technical side, I look at charts all the time. I always look at charts. I look at every chart. I review charts from the short term, from the 10 years, longer periods of time if needed, point and figure to basically, I'm on stock charts 50 to 100 times a day, popping in a symbol or checking different things. So then I formulate and I keep it. My process, there are certain signals that I use, and I boiled it down to probably about 10 that I find are most important. And when there are certain patterns that occur, and there are certain things that occur, I have found that there's high probabilities of making money or avoiding losses with just my formats. But there are other angles to technical analysis, and I'm really blessed to have found a couple of these that, go deeper. There are a lot of the technicians look at the same stuff. That actually is a bit behind the curve. And I'm actually not going to reveal my secret, but it has to do with another way of looking at essentially momentum oscillators over periods of time that tend to give us a head start on what technicians see, the breakout before the breakout. The things like, what really helped me with what my work that I found with silver, I had come on publicly and said, when we close above that, it was the high 19s, $20. And I forget if it was at that point, just recently, a weekly close or just a touch above it. One of the services that I really love confirmed my thoughts. And my thought was, silver is not going to go, it is not going to go like basically just plodding along and getting a little bit going. I thought it was going to shock people how quickly it went to the high 20s. And I thought it was going to go there immediately. And I mentioned that. And the one trusted source that I have said the same thing. And I'm like, you know what? I think this is going to be the case. And how many people were thinking that? How many people were saying that when gold breaks or silver finally breaks through 20 or whatever, that it was a clear resistance sort of a line that it hadn't got above? But how many people were calling for $27, $28 silver immediately? A lot of people were, expecting, and initially I was too. Maybe we go to 23 to 25 and cool off and this and that. But, the technical work that I do, the feel for the market, the fundamental research I do, I boil it down for you guys. It doesn't mean that I'm not doing the work. I do this all the time. I love it. So this is my life. I spend so many late nights and everything, like looking at all kinds of stuff. So if I'm not including it in my reports, I'm just saying, don't think I'm not doing my homework. But I am planning on putting out like a fall review on the blog that will be a full report and some more data in the next 2 to 3 weeks for you guys on the free list. And also that will be happening for premium members. Now, here's my biggest message, and this isn't going to go 10 minutes. It's already 10 minutes, but this is going to be good. So let me try to stop it at 20, and I'm not taking any questions today, guys, on the chats. So I should have probably stopped that. This is just a recording to send out. But my biggest message and what I'm seeing from, it's crazy because you see this the most from dealing with CEOs of mining companies. First of all, we have issues in this industry as it is. But there are certain things that really bother me, and there's patterns and things that I've seen that justify actually putting out a mission statement, a memo, a notice, a public notice to mining company CEOs of all the far from best practices that I see. And I am planning on doing that. And there's actually another individual who's got a broad European audience. We've discussed talking about this, but I want to write it out. But in any event, the one thing that bugs me is when, you have a lifer in the mining sector that doesn't really believe in the metals they're looking for or mining, and so in general, if you're a gold and silver miner and you are not, you haven't been bullish on the long-term prospects of that, and then you also, you're just making a living and you're doing deals and you're drilling and you're trying to find something, but it's nothing special to you. It doesn't represent anything, and you're not, at least bullish long-term. I'm not saying you have to be a short-term genius, but, that bugs me. But the biggest thing that I'm seeing recently is that so many people, so many CEOs are still stuck in the 2013 to 2019 arena. Really hard to raise money, raise it while you can. And my discussions with these guys is we've done, in elite and in some premium cases, I have to count. I think we've done probably 10 private placements since the end of May. And I did another 5 on top of it myself, where I just got in last minute from an invitation. And in these other 10 cases, we were either a lead order or we are very involved because these were a lot of our big positions. And I have to warn everybody up front. Here's what's going to happen. We're going to call a number and your stock is so cheap, and we're going to say you're going to raise up to this amount. Here's how much we want. How much do you want? And where's the cap that you are going to promise me you don't go above for too much dilution? And they're like, what do you mean? They're just not thinking about that as being a situation. I'm like, I'm going to make a prophecy to you, and it's going to be 100% true. We're going to start this process. Stock's going to go to a premium. By the time we get our guys in, every Tom, Dick, and Harry is going to be asking to get in when the stock's at a 30, 40, 50% premium. And I need you to know where you guys say no. Otherwise they just take all the money because of this old mentality and dilute the hell out of these share structures. But I'm getting at this because this is a good sign for investors. And even the savvier CEOs in these areas, they're not tuned into the market at all. If you've been paying attention or have any knowledge or any advisory capacity from people that are smart and just are paying attention, you would realize that the ball game is changing, and it has right in our face. Gold breaking out of 1400 last August, to me, again, I talked about that so much. And if you had any basic knowledge, you would say, look, I got to be careful about how much of my company I give away at low prices because gold's going higher. And I'm a believer in it. It's just not the case a lot of times. But what I'm bringing this up for is that it's a widespread issue there, but it's probably even a bigger problem with investors that have been in the miners. And so my message to you is wake up. This is not 2013 to 2018. This is a new ball game. This is a bull market that is probably going to be one of the most powerful bull markets in history. And it will be one of the top 2 in my lifetime that I will have ever seen. And I think the one that takes the cake so far was when I was a young broker into the internet bubble. That was insane. And that's what I think is going to happen here, and could even be crazier. But let's just say that that's too outlandish. The fact of the matter is that bull markets, I think this has been a secular bull market since 2001. And then we had a breather from the 12 years in a row going up. And then we had 3 out of 5 years where gold was down. It wasn't even down 5 years in a row. And then we've resumed the bull market in 2016. But the real bull cyclical resurgence occurred when gold broke that $1,400 ceiling in last 2019. I believe it was in August. That was the signal. So that is the start of a fresh bull market in my mind. Technically, no question about it. And the miners, guys, here's what you have to consider. GDXJ and GDX, they just broke their 2016 monthly highs. So gold did that in last August. They just did it in June. So my message is like, they've gone up a lot, but first of all, bull markets don't last 3 months or 4 months, or they don't even last, it's 11 months in the case of gold. They last much longer than that. And, so gold itself is, and just breaking these new highs is another part of this new phase of a bull cycle. Now, I believed we were going to see resistance between 1900 and 2000. We overshot that. It doesn't surprise me that we've come back around this level and are needing to redigest all these gains. It's super healthy, but this thing's just getting started. So what I'm getting at is that, and this is a simple thing that I've learned, is that bull markets, particularly strong bull markets, will continue to frustrate you if you are waiting to buy in cheaper in a lot of things, okay? Like, you're going to get left in the dust so often, some of you may cry, because it's not 2013 to 2019, when if you had that strategy, you be patient, it came back down and you get filled. Those days are over. They're gone. If you don't have an order in, a good till cancel limit in, like with a stink bid, and we get lucky and there's a sharp, fresh flush in gold, silver, and the miners, you're going to miss a window really quick, or it's going to be so sharp that then you're going to say, oh my God, I better not do it. That's how bull markets work. They're sharp corrections, but they're short. They shake the trees and then they go back up. And so my message is adjust your mentality a bit. Not just adjust your mentality a bit. That's not even a good statement. Completely reset your mind to the times and detach. If you want to have great performance, detach your previous experience. Our recency bias stuff can go back years, and it's not going to work this time. What else did I have? So, and another thing with the miners is that, they were bombed out. That last bear market was the worst. In 77 years, GDXJ was down over 92% at its peak, okay, from 2011 to 2015. To get back to the 2011 highs, GDXJ, I believe, or it was GDX, has to go up 150% from here to just get to the 2011 highs. So gold is already there, and the miners have to go up 150% and tend to outperform gold, and are now outperforming gold. So just think about that. And so there's so much more to catch up on. Now, the other thing is that what we're seeing with the data, and I will give you some data here, this is helpful for me, is we've seen GDX versus gold has been outperforming, certainly since that March flush. GDX has been outperforming gold. The GDXJ versus GDX has started to outperform since March as well, but it has not been like a breakout. GDX versus gold had broken a downtrend line going back to 2016. So that means the miners' outperformance to gold is going to continue. The bigger ones, I mean, the producers will continue. And then the flow down, as we knew would happen and predicted with GDXJ starting to buck GDX, GDXJ starting to outperform GDX is going to accelerate. And then there's the silver arena, which silver versus gold, underperforming for so many years, has blasted that downtrend, and that has happened just obviously in the last month. But the silver miners, so the bigger ones, SIL, if you look at them versus GDX, it has been outperforming GDX just recently and broke a key top line. So I expect that silver mining producers will outperform the gold mining producers going forward to a degree. But the SILJ, which is more of a GDXJ, a silver junior versus SIL, they've been just starting to outperform, but they have a ways to go before they breakout. So I find that a little bit hard to believe because some of the silver stuff I'm in has been absolutely skyrocketing, but it means there are still tremendous bargains in the silver juniors where I've been focusing a lot of effort, and there's still opportunities in the junior gold miners. But last comment, guys, is this. So short term doesn't even matter to me, but I think your best chance for a buy-in cheaper, your best chance, you probably already missed it when we saw that flush to it was 1874 on August 12th. So we got into the high 1800s. I think what I would like to do for a more definitive situation for the call for the what kind of happens in September is I would like to see how we close the month. We need to see how this week closes and then the month of August to really see if this correction is over already and it's just going to start ripping again in September. We're going to see that pretty soon. But I think the best case, when I say best case, is like how much is it going to pull back so you can actually buy more, is probably 1800 or more of a consolidation. That's about it, guys. I don't see the 15, 16, $1,700 days of gold, 13, 14, those are long gone. So I wouldn't even wait until then. I would stagger bids if you don't own enough physical gold. On the miners, the thing you have to really watch is the metals, because the miners, if I see silver going up and then the silver miners are down any particular day or week, I'm not worried about it. As long as silver's strong, those are going to do their thing, and same with gold. Now, what probably is going to happen, I think, is that we're going to find out in the next 10 days that this correction is already over, probably, and we are going to resume a move to new highs by the end of the year. September, October even, we're going to be in the mid 2000s in gold, and silver much higher as well. That's my guess at this point. I would like to see that last data. But again, people are behind the curve about where we're at in this bull market and how powerful it's going to go from here. Silver is the opportunity of a lifetime, even still at 26, 27. If you don't own a lot of physical silver exposure, I would absolutely strongly recommend that you do that, whether you take the physical delivery or you have a trusted physical silver ETF. And that's at least what I was going to say today. And there will be more. And I went over again. I hope you guys enjoyed some of the content, though. And, I'll have a lot more coming out in the next couple of weeks, including some specific stock ideas. I'm also going to be notifying you guys really soon that the premium prices are going to double. I raised them, I believe, less than a year ago, and I'm raising them again. It's going to be by year end. It might even be within a month or two. It's not happening yet, but I'll give you a heads up just in case you've been considering that. But those prices are going to double. And then, the elites are on a waiting list. That price is also for new people that, don't have a previous history. We're looking at the new pricing for elites if and when they open up slots. And then, there will be limits on premium member joining after a certain point, which I think will hit. That's going to be, I want to keep it premium. I want to keep elites. It's not about getting greedy and just taking tons of subscribers. I mean, we're still fine. The premium's not so huge at the Gold Investment Letter. We could still take more people, but there's going to come a point, price raised or not, probably at some juncture here where I at least pause it and say, you can join a waiting list and we'll let you know when we take more people. But in any event, have a great day. And please just examine where your head's at as this pertains to this market, particularly those of you that have been in it, for so long, and be honest with yourself. Are you still living in the past? Okay. Because if you don't reset, you're not going to maximize this generational fortune making, life making market that we're in and we're going into. And there's also situations with sell strategies and stuff like that. If you're flipping around here and there with your money, it's peanuts, it's pocket change. You could just sit on some of these juniors, and if you understand and have the discipline and the conviction about the long-term part of it, you could take little pieces off along the way. But some of these stocks are going to go up 50, 100, 200 times. It can make you rich. And I don't like to say that on the outset, but they're going to make me really rich. So have a good day.